Hey guys, welcome back to Lexington Capital Holdings. My name is Thomas, your head of business development, and I'm here with
Joe Pepe.
And today we're going to be talking about qualifying clients, what to look for, what not to look for, and how to vet them correctly for our products and programs.
So qualifying your client is one of the most important things you can do for your business. One, right, saves a lot of time. Time's valuable.
Absolutely.
Time's an asset, time's money. So, we want to be very transparent through the process. We want to be transparent with your clients, making sure we can find the right solution for your client, and obviously going in all the programs for yourself as well.
The number one thing about properly vetting a client is making sure that you're asking the right questions. Getting what their revenue is looking like, what their credit is looking like, their time in business, how much they need, what they're using the funds for, and how quickly they need them are all extremely important parts of qualifying a client to making sure that we can get them into the program that makes the most sense for them.
At the end of the day, right, you need to understand these simple things for the client, because if you don't, you kind of going around the circle, you don't know what's going on, you're freeballing it. You kind of got to figure out what the client is really looking to get accomplished. That way we can really limit and we can target to what we're trying to get for the client.
Being that we are a full financial marketplace, we have a ton of different options, from traditional credit-based programs to alternative revenue-based programs. So we have a lot of different avenues that we can go to work the client into one of our programs, which is why qualifying them is important. If they have great credit, but maybe they don't have any revenue, no problem. We're going to go the more traditional banking route of things. And if they don't necessarily have the credit, but they have great revenue or both, perfect. We can go the alternative side of things. As well as that, speed plays a big part. If they need the money quickly, we're going to be looking alternative. If they need the money, but they have time and they want to get the best rate, dollar amount, term, we can look to the traditional side of things.
Understanding and knowing your client's industry is also a key point as well. Today in the economy, there's a lot of restricted industries. There's a lot of industries where lenders really tighten up guidelines. So understanding, if they're in real estate or transportation to medical, diving in on that aspect.
Everyone has their board preferred industries, and again, to touch on the difference between the alternative and traditional financing, we can still get these industries done. Your auto dealerships, like you said, your truckers, your construction, your real estate. We can get it done on the traditional side of things, whereas maybe the alternatives are more form fit for things like medical or manufacturing and restaurants. Understanding what kind of program is going to fit that client the best is going to help you, one, get more clients, retain them, as well as expectate them correctly on what they may potentially be seeing as far as financing options for the business.
Understanding the qualifications for your clients is definitely key as well for specific products that we have on our platform. Especially in the alternative space, there's really three main things that we do initially look at, right? We look at the time of business, we look at the business revenue, and we look at the client's credit. So some minimum guidelines to check off the list to make sure we do qualify is that we at least want to be 6 months for time in business.
Yes.
We want to be producing minimum $10,000 of gross revenue per month, or 120K annual gross sales. And then roughly we can get away with a 500 minimum credit score. Very high risk files that we can obtain in the alternative space.
Absolutely. And big thing about the revenue too is you want to make sure that they have consistent deposits in their checking accounts for at least a 3 to 4 month span to be able to be qualified for one of these products. To touch on the traditional side of things now, the only thing that we would need for the traditional side is to have at least a 680 or higher credit, or we could utilize a co-signer as well. Doesn't have to be another business owner. It could be a family member, a friend, anybody who's willing to help you out with a 680 or higher, and we can get you pre-qualified for one of our banking programs. To touch on to the credit reports themselves, to help you qualify your clients a little bit better, just so you know what to look out for on them. It doesn't always come down to the score. So if you have a light credit report but your scores are high, there's still a chance that we might not be able to get that high of a pre-approval. As well as the other side of the coin, you can have someone with high sixes who has great credit, but maybe they're a little overutilized. What you really want to look out for are bankruptcies, many recent late payments, as well as open collections, as well as a ton of different inquiries. But don't let that hold you back. We'll always take a look at it if the score is there, because we have a lot of relationships with amazing banks, and we can get a lot done.
So to recap of what me and Tom went over, it's really ideal to understand how to qualify your clients. One, it saves a lot of time for yourself. It makes you seem as a trusted advisor to your clients. That way, when you do bring your clients to the table, we can present the most efficient option for your clients in the business world of financing.
Absolutely, and like I said, the traditional side only need a credit report showing 680 or higher co-signers. Alternative, 4 months bank statement showing consistent revenue of about 10,000 and a one-page application. And from there, we could see exactly what we can do for the client. Once again, thank you guys so much for tuning in to our videos. My name is Thomas McAuley, the head of business development. I'm here with
Joe Pepe.
And we're looking forward to seeing you in the next one.